Good evening, everybody. Fortunately, we've got the great pleasure of having Steve Primo with us again. And the big benefit that Steve brings to us is the insights of trading based upon somebody that was right on the floor. So with that, Steve, welcome again to the Candlestick Forum. We're anxious to see your information tonight.
Thank you, Steve. Thank you very much for giving me the opportunity to present tonight. And welcome and thanks to everyone at Candlestick Trading Forum for inviting me to speak. But welcome once again. I want to thank everyone for attending tonight, and thanks for pointing that out. My name is Steve Primo, and I have a great strategy for trading pullbacks in all markets. This is going to be a great educational presentation. Now, let me share with you that chart once again. Okay, this is an older chart in the spiders, and this is the way most traders would identify something within the market. First of all, they say, well, there's not really a lot of information, not a lot of data to really make a decision as to what's happening. But then once you see some more trading days take place, you say, well, I think we're in a downtrend. It looks like all the indicators are confirming and the institutions are selling. So I'm going to start looking for places to get short, or maybe I'll just sell at the market, okay? Well, with the strategy I'm going to be teaching you today, this is strategy number 1. You would have actually seen this as an opportunity to buy. In fact, this was a buy signal right here at the very bottom before the market went straight up another 8 points. These are the spiders that represent the S&P 500 index. That corresponded into about 600 or 700 points in the Dow. So you're going to see how really simple it is to apply this method. As I said, once again, I'm going to share with you all of the complete entry rules. And on top of that, all the displays and all the examples are going to be presented on our new platform. This is the PTS Primo charting platform I designed specifically to make trading simple. It's an educational platform that makes trading simple. So this promises to really be a great educational presentation. Thanks again for attending. My name is Stephen Primo. I'm the president and founder of Specialist Trading. And 10 years ago, I teamed up with Pro Trader Strategies with just one goal in mind, and that was simply to educate traders. I know that Steve Bigelow does a lot of that as well, because we're, I guess, old school. We feel that that's really missing from most traders. Most traders take themselves out of the game and rely on someone or something else to make their trading decisions for them. But if you have sound fundamental trading knowledge, that's really where you can, shine and come into light, because you're in charge of your own trading decisions. And that, in my opinion, is the only way one becomes a consistent trader. Now, I've been trading for 42 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, if you ever see those old pictures of the stock exchange floors with guys screaming and yelling and a bunch of paper on the floor, those traders behind those big podiums making hand signals, those are the specialists. And basically, if you wanted to buy or sell a particular stock, you had to go to the trader who specialized in making a market in that particular stock. So I did that for a total of 9 years. I made markets in waste management, in US Air, in IBM. And I traded through the crash and made markets in the crash of 1987 and the bull market that followed. So I've seen and traded through just about every market environment you can think of, straight up, straight down markets. I know what works in terms of consistency, and I know what doesn't. So that's why we formulated Specialist Trading, to teach all these consistent methods so that you could, once again, rely on your own trading knowledge and make your own trading decisions. So I'm going to teach you today the entry rules to this particular method, but before we begin, we're required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using strategy number 1, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy our handle right there. It's abbreviation for Specialist Trading. Every day I post different information, anywhere from signals that our strategies have generated to little bits of financial wisdom I've accumulated along the way. So there's lots of great free educational information. Feel free to follow us on Twitter. So once again, before we begin, as I stated in the beginning of the presentation, we are an educational company. Our only goal is simply to educate you. The main reason is because when I first started trading 42 years ago, I probably suffered the same way most of you have in the past. I mean, I was doing all the things I thought I was supposed to, and I wasn't making a dime. I was really having a difficult time. I was basically treading water. I was lucky enough to have a couple of mentors that taught me all the things that I teach in my courses. And this, in my opinion, is what's called the specialist edge. This is what gave me that edge and what has sustained me going on 4 decades now. So my goal is to teach you the same edge, how to trade with the specialist edge, so that hopefully you'll be able to be trading 10, 20, 30, 40 years down the road as well. Okay? Now, since this is going to be an educational class today, I want to take each and every one of your questions, but if I stop at every slide, I'll be taking far too much time of your evening. So please, if you have a question, just wait till the very end. I promise I'll get to it at the very end. So many times, if you remember the question, it'll be answered in the very next slide. Okay? So this is a static presentation. It's all on PowerPoint. I don't have access to live charts right now, but everything here, you'll be able to understand the rules completely. Okay? So once again, if you have a question, wait till the end to ask, and I'll answer them all at the end. Okay? All right. So with that stated, let us begin today's presentation. We're going to be talking about strategy number 1, our most consistent pullback method, and we're going to share with you the entry rules. Okay? I believe there are only 4 rules altogether. We're going to share with you the majority of them, okay, for entry. If you've been trading for a while, if you have any type of experience, you'll have an idea of where you want to place your stop or where you want to exit. I think the main gist of this particular strategy is the actual entry, though. Okay, let's talk about some of the highlights. It's a pullback strategy. If you're not familiar with pullbacks, what that means is we look for an overall trend, and let's say we have an overall uptrend established. Well, then we don't look to buy on a breakout or while it's going up. We look to buy during the little dips or the sell-offs in that overall uptrend. So we're buying lower in uptrends. Now, conversely, if we have an overall downtrend, we're not selling short at the market or buying puts at the market. What we're doing is we're waiting for price to have a little blip in price, a little bounce, and we're selling at a higher level. Hopefully, the trend will resume lower. So we'll get, if we're buying at lower prices. If we're selling at higher prices. Now, we do this by using a unique Donchian channel application. Donchian channels are a very common indicator. You can find them on a lot of charting software platforms. If you don't have it, I would contact your tech support or whatever platform you're using. They should be able to have it for you. I believe there are some free websites, if you just do a Google search, that have Donchian channels, okay? The beauty of strategy number 1 is you can apply it to any market, any time frame, and any direction. So even though the majority of the examples I'll be sharing with you today are in stocks, you can apply it to 5-minute charts of the futures. You can apply it to currency pairs, to Bitcoin, to commodities. It makes no difference. We have students who trade this in virtually all markets and time frames, okay? Now, as with all of our methods in our courses, I always tell my students, please learn the strategy first. And the best way to learn is through paper trading. So you're going to learn the first 2 rules of this. Please do me a favor. Do not jump in and start trading this tomorrow. I know your eyes will light up and say to yourself, wow, this is great. But if you haven't studied the rules and don't really understand the process, most likely you'll lose money right off the bat. And you'll say, hey, this doesn't work. This guy is a sham. And most likely it's because you didn't implement the rules correctly. So please paper trade what you're seeing here today. Now, our edge at specialist trading is consistency. And consistency, most people think that means, oh, well, you have a method that makes money all the time. No, that's not really what consistency means. Consistency means an awareness that you will have losses from time to time, and that's perfectly okay. Just the same way every athlete doesn't hit a home run at every swing, every basketball player doesn't make a basket, no matter how good they are. Every entertainer does not have a hit movie with every movie. But if you're consistent, you'll be able to recoup and bounce and make up for those losses. That's what our strategies do. So I'll even show you a couple of losses, but show you how the very next trade was able to recoup those losses and make it back. That's what will really make you a consistent trader, okay? Okay, so those are the highlights. Here's the indicator. We're going to use the 21-period Donchian channels. Now, a lot of students have said, Steve, can I use a substitute indicator for this? I really can't find the Donchian channels, or I don't know where to locate them. A lot of students have tried to do this, but, and you know, I have myself, because I know not everyone has a Donchian channel. You won't get the same results. A lot of students have asked if they can apply it with Keltner channels or with Bollinger Bands. You're just not going to get the same results. So I really wouldn't recommend it. It really works the best with 21-period Donchian channels, okay? Let's go over these rules now. I'm going to read them rather quickly because I have a lot of slides to share with you on exactly how to implement this. And through my experience, I think Steve probably gets the same way too, that you'll see through charts and examples and chart snapshots, the students learn a lot quicker than simply by reading them text. So I won't spend a lot of time on this. Remember, this is probably being recorded as well, so you can go back and study this at your own leisure. But the rules for buys are simply, I'm going to give you these 4 rules here. First of all three Donchian channels must be headed in the same upward direction. Okay, now you notice I didn't say in sync, because they're not going to be in sync. I'll explain that in just a few seconds when I show you a chart. But they must be headed in the same upward direction. Okay? This means the overall trend is up. Now, look to buy when a declining price bar's range is entirely below the rising middle Donchian channel. This is what we're going to call our setup bar. Now, I'm sure most of you are thoroughly confused right now. I told you, it gets a little wordy, but it'll make better sense when I show you a chart. Now, once you find the setup bar, you're going to buy 1 tick above the high of that setup bar. Okay? That's it. Those are the rules for entry. Now, please remember, always paper trade before applying real funds. Okay, let's give you some examples here, some generic examples, and show you how simple it is really to apply this. All right, so let's look at this generic chart. We specifically left out what time frame. We specifically left out what market, because we don't want you to think that this only works in one market or one time frame. It makes no difference if this was a tick chart or monthly bars. It makes absolutely no difference. So looking back in hindsight, we can say that, well, this was actually some type of an uptrend, right? Right. And in hindsight, where would be the most opportune place to buy in this uptrend? Well, obviously be right here, right? This is where you want to buy at the low, on the little sell-off, on that little pullback within the uptrend. But easier said than done. How can we do that? Well, here's where the 21-period Donchian channels come in. You simply apply the Donchian channels, and this is where you see how they're all headed in the same upward direction. Okay, this is what we're looking for. Now, once again, they are not in sync, because as you notice, where the top bar has been going sideways, we have a kind of a stair-step approach in the middle and on the bottom. So a lot of students have trouble and they'll say, well, they're not in sync, but they're not supposed to be in sync. They're still headed in the same upward direction. So if you have trouble, if you see a long sideways bar, the way to resolve that is just ask yourself, where was the previous setting? If it was below, then that means it came from a lower setting, so that means we're heading upward. Even though we've been going static sideways for a while, our last setting was lower, so we're still heading upward. Okay, so here's what you're looking for. If we have all three channels going in an upward direction, usually when you have a strong uptrend, price will touch that top channel, as it does here, okay? And it touched again. Now, after it touches, maybe it touches there for a number of bars, maybe only one bar, you start to see a sell-off, okay? So we touch, as we go up, we're touching that top line, but then we start to sell off. This is the pullback we're looking for. This is the opportunity to buy at lower prices. But we just don't want to buy, we need a little structure. We just can't say, well, I think it's gone down low enough. So what we're looking for, as price, let me get my pointer out here. As price starts to sell off, as you see right here, it's selling off, and now we touch the midline, we are intersecting the middle line, and now we are completely below the rising midline. See that? This tells us that that's a valid setup bar right there. So you found the setup bar. Now you're going to enter once price trades on the very next bar, one tick above, right here on the screen bar. And you want to see it happen on the next bar usually, okay? Now, as you can see, the next bar never traded up there. So, this is good. We can now lower it down to the next bar because that is a valid setup bar too. So we're just kind of lowering this all the way down. If we didn't buy it there, then we lower it down and we're getting even in at a lower price. Now here's where students have trouble. They say, well, Steve, I waited and it never closed above there. Remember, the rules don't say it has to close up there. It just simply has to trade there, all right? It just has to trade there intra-bar. We don't care where it closes. It just has to trade there. That's our confirmation that we traded above. Now, this happened to close above. So as you can see here, this is where you would have entered. And once again, we are not telling you, remember, we're not teaching you a system that tells you what to buy, how to buy it, where to enter. We're just giving you a high probability entry point. If you want to buy calls, you can buy calls. If you want to buy the stock, you can buy the stock. If you want to put some type of spread on, it's up to you. It's not our job to tell you how to implement the actual strategy. You can get along whatever you want, however you choose to. It's just a high probability setup here. So once you enter at this point, Well, remember, we can't divulge what the stop placement is and what the exit points are because we have roughly about upwards of 6 or 7 different entry points and 6 and 7 different stop placement and 6 or 7 different exit points, I should have said. But as you can see, the trend resumed. So this is the nature of this strategy. You see how simple it is, okay? Very, very basic, very easy to apply once you have the Donchian channels. Now, let's look at the sell rules. I'll go over them really quickly. In fact, I'm actually not even going to spend that much time on them. They're the exact same rules. They're just turned upside down. I'm going to share with you another generic chart because I'm sure that's going to make a lot better sense. I don't want to confuse you by giving you the rules. You'll have these for your records once you get the video of this. But let me share with you the rules showing you the charts. Once again, I'm sure Steve agrees with me that you tend to learn much faster when you see the examples on a chart as opposed to just the written word. Okay, so looking in hindsight at this chart, this was in a downtrend, right? Okay. Now it started to bounce a little, but then headed straight south. How could we have taken advantage of this? And where would be the most opportune place to sell? Well, obviously, in hindsight, the best place to sell would have been right here at the top. But how could we have done that? Well, strategy number one, all you have to do is apply the Donchian channel. Okay? 21 period Donchian channel. And now you see how they're all headed in the same downward direction. They're not in sync, but they're in the same downward direction. They're not in sync because, as you can see, the bottom bar is going sideways, the bottom channel, whereas these have a kind of a stair step, sideways, down, down, kind of sideways, down, lower. So these have a stair step, and this is going sideways. So you can say to yourself, well, how do I know that this is going in a downward direction? Well, look at the previous setting. It was up here. So that means the previous setting was above. It came down lower. So it is still headed lower. So this is valid in terms of all three are going in the same downward direction. So that meets rule number one. Now, as price starts to head lower, what it usually does is it will touch and hug this bottom line, okay, because we're in an overall downtrend. As you can see right there, price is touching the bottom line. After it does that, we don't know how long. Many times it'll do it for 10, 20 bars. Oftentimes it just does it for 1 bar. But after that, usually you'll get a little bounce, which is right here. That's the pullback to the upside, okay? Now, as we pull back, as we start to rise, we go higher and higher. We touch and intersect the declining midline, and now we have a bar that goes above, that is completely above, not even touching. Doesn't matter where this bar closes. It doesn't matter the length or whatever. It doesn't matter. All we care about is that the range from top to bottom, not the open to close range, not the range of the candle, of the body, but the top of the wick to the bottom of the wick, if you're looking at candles, or the extreme high to extreme low, is not touching at all this bottom line. Okay? We don't care if it touches this. It's okay, but it just can't touch this. This is just a way to tell us that we've gone up high enough. So if we do that, well, that's our setup bar, circled in blue. So what's the rules now? We've identified a setup bar. Does this mean we can sell at the market? No, because it may just keep going up and keep going up, and then you're saying to yourself, why did I sell? So what you want to do is wait for what we call confirmation, meaning that it has 1 tick below or 1 pip below or whatever you're trading, okay? And it doesn't have to close there. All it has to do is trade there intra-bar. So if it trades and then closes higher, that's okay. But it did trade there on the very next bar, so you would have entered. However you want to enter, if you wanted to actually short the stock, if you wanted to buy puts, some type of spread strategy or method that had a downward bias, it's up to you. That's not included in the course. We don't tell people how they should trade. It's up to you. We have students around the world in over 115 countries and in virtually every state in the United States that trade our strategies and trade different markets. So it's up to you how you want to apply it. And as you can see, the market went lower. So that's the basic gist of this particular method. Very simple, as you can see. We're looking for an overall trend as established by the 21 period Donchians. We're looking for some type of a sell-off in an upward trend, and we're looking for some type of a bounce in a downward trend, as you see here. Then we want to see a bar that is completely above the way it is here in a downtrend, above the midline, or completely below the rising midline in an overall uptrend. It's that simple. All right, so let me share with you some more examples. In fact, let's go back and look at that very first chart we talked about, the spiders, okay? All right, where most of the people were saying, Steve, this is in a downtrend. We can't buy this. Look at the market's getting killed. We have a bearish engulfing pattern here. Look at these bars. They're closing on the lows. You know, all of the institutions are selling. You got to follow the big money, and there's a lot of talk about some economic indicators that this is going to go much lower. So we're looking at this. We're either staying out of the markets or we're looking this to short. Well, once again, it's the way most traders trade. Why don't we just listen to the market? What's the market telling us? Well, we apply the 21 period Donchians. In which direction are they going? They're all going in the same upward direction, right? So what we want to do is wait. As price is going up, it touches, and then it starts to sell off. As it sells off, it touches and intersects, and now we have a bar completely below. You see how it's not touching? The top of the wick is not touching? So that's our setup bar, okay? Are we going to buy at the market? No, we still need confirmation because maybe, your indicators, maybe the institutions are right. Maybe this is going to go straight down. So we want to make it sure that at least goes above the setup bar's high. So that's where we're going to enter. Remember, it doesn't have to close there. It just has to trade there. All right, so you can either have an order placed. You can watch it, wait for the next day to see where it opens. Now, the very next day, it opened up a little bit higher, but then it went up 8 points in the following week. Okay, now not a lot for the spiders, 8 points. If you're trading the stock, it's not. It's a nice 5-day gain. But if we use this as some type of a market timing tool, in other words, if we use this to judge what the market was going to do, wouldn't it stand fact that the S&P 500 was going to go higher and would the Dow go higher? Because that 8 points in the spiders transferred over onto 650 Dow points. So let's say you were thinking about buying a stock in the S&P 500. You could have used this as a market directional tool and gave you the confidence to buy that stock you were interested in because most likely if this triggered, most likely the market's going to follow suit. Lots of ways to use this strategy. You can apply it to ETFs and then trade whatever inside that ETF. All right, so let's look at some stocks for all you stock traders out there. Another example here, XLNX. All the Donchians are headed in the same upward direction, the same format. We start to sell off. As we sell off, we touch. And now we have a setup bar completely below. Here is where our entry is going to be. Now, as you see, it gapped up. So this is where we say we are not a systematic company. We're telling you where to buy, how to buy. A lot of our students say, well, Steve, if it gaps up to a certain point, I'm not taking a trade. That's fine. That's your choice. This is what we encourage. We want you to make the decision, not us, because we don't tell you how to trade. We're simply teaching you high probability setups. But some students will say, no, as long as it gaps up in a reasonable price for me, I'll still get in the trade. So if you would have bought, that would have been a good idea because you made 7 points in the next week or so, okay? To the downside, all right? I believe this is WP. We see this coming straight down. All the Donchians are headed lower. As it's going lower, we are starting to hug the bottom channel. That's what we're looking for. And then once we stop hugging it, we start to rise. This is the pullback. As the pullback goes higher, we intersect. We're touching, intersecting until we get to this bar right here where it is completely above the declining Donchian channel. That's your setup bar. So you want to go short, 1 tick below, however you decide. And had you gone short there, well, in the next couple of weeks, 2 or 3 weeks, 16 points to the downside. All right, next one we have here, 7 points once again to the upside. We're hugging the top. We start to come lower, and now we have a large gap below. Now, we don't have this here, but this was your first setup bar right here because this bar was completely below. So you would have entered 1 tick above. But as you can see, we never traded there. So as long as this bar is still meeting all the rules, meaning that the Donchians are headed up, well, now we lower our entry point down here. Now we can get in at an even lower price, which we did right here. 7 more points to the upside in the next week. Okay? Once again, nothing has changed. We didn't change anything because of the price of the stock or the particular stock. I believe this is NTRS. All we did was, use the exact same rules. Okay. Now, here's an example of where you can use different exit points. Now, in our full course, we give you different exit points. So it's up to you to decide. Because the reason is, once again, we are not a systematic company. We're just giving you the options on where you'd like to get out. A lot of our students say, Steve, I'm the type of trader where I want to get in and out quickly and go to the next one. Okay, well then we have about 2 or 3 quick exit points. Whereas some traders will say, Steve, I'm in this for the long haul. I want to get as much bang for my bung out. Okay, well then you just stay in, and we teach you different ways to do that. Had you stayed in from the very first step to go short, well, that's 17 points coming in to the end of the month here. So that was a very nice trade, 17 points in roughly about a month and a half. Here's an Apple example. Same exact process. Nothing changes. All three Donchins are headed higher. We start to have the sell-off. Remember, the first thing is we touch the top one. We start to sell off. We're intersecting. Here's our setup bar. It's hard to see, but it's just a tick or two below the midline. Now, once again, you have the choice to go long if you want. It's up to you because we had a nice gap up, but it would have been the right decision to make because look what happened. 20 points in the next couple of weeks. This was in Apple. And once again, FIZZ, I believe, this is just a perfect textbook example of the market headed lower, where most people would say, well, Steve, look at, we broke the previous two highs, so that means we must be in an uptrend. Isn't that the definition? We're making a higher high? Well, not according to this method, because the Donchin channels are still headed lower. You would have entered right here, because this was the first setup. You didn't enter. This was the second one. You raise your entry. The third one you raise, and now finally would have entered 30 points to the downside. Okay. I believe this is Netflix, another great example of going long. As we can see here, as we get closer, as we have the pullback, we start to oscillate above and below. And for 4 days, we didn't go below. So there's no real setup here until this day. Now we have a valid setup bar. It's completely below the midline, and all the Donchins are still rising. Remember, the Donchins need to continue to rise. They have to still be going in an upward direction. This is where students lose money. They'll send me an email and say, Steve, this didn't work. I bought it and it went down. And I said, well, can you tell me to stop? And then I'll look at it and I said, remember, all three Donchins have to be headed in the same upward direction. And they'll say, I thought they are. And I said, look what the top one's doing. And maybe the top one started to go down where the other two were still going up. So this is why you have to be vigilant and learn the rules and paper trade first, okay? All right, here we have a perfect example of how, once again, you have to see how this, using this confirmation method, meaning that this would be your first entry point, one tick below here, but how we never traded, how you move it up to this one, how we never traded, and then you move it up here, and finally you would have gotten in for a nice 32-point gain in Triple L, I believe. Okay, so we looked at stocks. Let's look at some E-mini futures just to let you know that this works on any market and any time frame. Let's look firstly at an hourly chart of the E-mini futures. Okay, this was, I believe, last month or so, or a month or so ago. Same thing applies. All right, this is an hourly chart of the E-minis. All Donchins are headed in the same upward direction. As they're going up, they're touching the top one, and now we start to sell off. We touch the midline, and then we bounce up above. We touch it again, bounce up above. Touch it, intersect it, and now we are completely below. So this first bar is our setup bar right here. We're going to buy one tick above. Does not have to close there, just has to trade there. But did it trade there? No, it didn't. As long as all three Donchins are still headed in the same upward direction, we can lower our entry down to the next bar. So now we're able to buy at an even lower price, more potential for a profit. Now on that bar, we did enter on the very next hourly bar, 32 points coming into the next day. That's potentially $1,600 per contract. Now we're not saying you would have made $1,600. Some of our students like to take a point and say thank you. Others like to take 5 or 10 using our different exit plans. It's up to you. Remember, you are in charge of your trading. That's our philosophy. You are the one who makes the decisions. We give you the information. We give you the different exit points, different stop placement, ways to track the trade, but it's up to you to decide. This is not a system. We only teach and trade strategies which allow for your own insight and your own discretion. Okay, another great example here in the E-mini, but this is on a 5-minute chart, I believe. This is what we mean by consistency. Now, the chart didn't go back enough, but it looks like a solid straight line here, but the previous setting was higher. So we are still all going down. We're hugging the bottom channel, and we start to rise. We intersect, and now we have a setup bar right here, okay? we have another setup bar right here. So you would have entered, and depending on which exit you use, well, maybe you would have taken a quick, number of points. But if you didn't, most likely if you had our basic stop above the previous high, you're stopped out with a minor loss, okay? This is where most traders love to play the victim game and say, this stuff doesn't work. I don't want to use this. My first trade was a loss. Remember, it's about consistency. Not every athlete makes every basket. Not every entertainer has a hit movie. What you want is a method that is consistent enough to recoup those losses. So you got to get back up on the horse again. Because as you can see here, if you would have been stopped out, well, look, the Donchins are still headed lower, so they're still telling you we're in a downtrend. And here's another setup bar. So you got to get back in again. And now you have potentially the ability to capture 40 points. So you think you could have had the potential to make back that loss and then make a little more? This is what we mean by consistency. There will be losses from time to time. That's perfectly normal. What you want is a method that's able to recoup those losses. The sooner, the better. Okay? All right, that's the E-mini. Let's look at the Forex markets. We know we have some currency pair traders out there. Nothing changes because we switch to the currency pair. See, that's the beauty of a real valid strategy or method. So many methods have to change for the market. They have to change for a specific market. They have to change for a specific time frame. It doesn't apply with any of our methods. Whatever you're using can be applied to any method, to any market, any time frame, any direction. Makes no difference. Here's an example, I believe, in the British pound. Now, this chart doesn't go back enough, but trust me, it's coming from a lower setting. So all three Donchins are headed higher. As it goes higher, it's touching the top Donchin. Now it starts to sell off. This is the pullback we're looking for. Now, this is where most traders have difficulty because they say, well, it's come back enough. Look at this is a nice little pivot low we've made here. It's a nice little a doji or a couple of. This is where we should get in. We want to get that full pullback. So we wait for price to intersect and then be completely below. This is our entry point. We buy 1 or 2 pips above, and in a couple of days, 350 pips potentially we could have captured. Okay? That was a daily bar. We can go to I believe, a 4-hour chart, or maybe this is a daily as well. But this is in the, I believe it's in the Canadian dollar. I'm sorry, my screen is really small, so I can't read it. But anyway, it doesn't matter because the Donchins are still headed lower. And this chart is not big enough, but it's coming from a higher setting. So as it's headed lower, price will start to bounce. It will touch the middle line, then it is completely above. This is consistency again. If you entered right here to go short, well, guess what? If you had a stop up here or a tie to stop, you would have most likely been stopped out. But you can't go in the corner and lick your wounds. You have to get back on the horse because what do we have here? We have another setup. So you could have quickly made back what you lost and potentially captured some more pips. This is what we mean by consistency. And lastly, commodities. We know that a lot of traders like to trade commodities when the markets kind of dry up. If this bull market ever ends, people want to trade something more tangible. They want to trade things that are real. And the perfect market for that is commodities. People say, well, Steve, do your strategies or methods work on commodities? Well, let's take a look. This is crude oil. Notice how everyone has been astounded how oil just keeps going up and gas prices going up. Well, in February, what did we have here? The Donchins were headed higher. We were touching the top Donchin channel. As we sold off, we had our first setup bar here. We didn't trade above. Our second setup here. I believe this is in the first week of February. As you entered, you'd still be long crude oil if you use some of our long-term exit points. So there'd be no reason to try and figure out economically or what's going on with conditions in the world to figure out why crude oil or oil is going higher when we knew almost 3 months ago that it was a buy. I believe Steve thinks and has the same philosophy as I do that everything's in the price. So that's all we're looking for. The price is telling us that this was a pullback and that you want to take advantage of it. This is an opportunity to go long. Okay, that was in crude oil. We can look at another obscure commodity, cocoa. Okay, cocoa using the same concept. All three Donchins are headed lower. You see how we came from a higher setting and now we're going sideways. Here is the bounce. We're touching, intersecting. Here's our first bar completely above. So we would go short right here, but it never traded there. So we move our entry point up here. We're going to get in at a higher price. And you would have sold and 165 basis points to the downside in cocoa. Okay? So, let's recap before we go into question and answer. I want to tell you about a great offer we have for all the people attending today. Strategy number 1, it's a very consistent pullback strategy as you've just seen. It trades stocks, even in futures, forex, commodities, Bitcoin, anything you can think of, you can apply this strategy to. But you have to apply it with the 21 period dodging channels. I know a lot of students have asked me, Steve, I don't get the 21 period dodging channels. Can I use Bollinger Bands? No, it's not going to work. Trust me, I've been trading this for about 20 or 30 years. I've tried to experiment with different methods. It just won't work. Or Keltner channels, okay? The beauty, once again, is that it can apply to any market, any time frame, and any direction. But with all of our methods, we ask that you please learn the strategy first. Please paper trade. Remember, we just shared with you, we gave you a great appetizer for an expensive strategy here. We gave you the entry point, which is the most important part. We didn't talk about stops or exits because that's part of the full course. In other words, the people that have paid full price for this course, it wouldn't be fair to them for me to give away the complete rules. Like, that's not fair. That's like going to a restaurant and you pay the full meal, but the person sitting next to you got it for free. So we've given you the gist of it, though, so you understand how it works by applying the entry rules. But please, paper trade this first. Our edge is consistency. Consistency means there will be losses from time to time. Don't ever let anyone tell you that that's a bad method. What you don't want is some method that goes into a series of losses. That's not consistency. What you want is a method that, sure, we'll have a loss every once in a while, but then we'll be able to recoup it a few trades down the road. Okay? That's what all of our methods are. Okay, so before you ask me questions, I want to ask you a question. Do you think this strategy could have helped your trading this past year? Okay? Seriously, think about it. If you're having trouble, and if you like to trade pullbacks, do you think it could have helped you? Well, I want to tell you about a great discount offer we have for all the attendees today. We have a great offer because what we're going to do is give you our full strategy number 1 course. Okay? This course usually runs for $6.95. This comes with all the exits, all the different places for stop placement, all the different exits. Also comes with an aggressive version as well. Usually runs for $6.95. You're going to get that totally free. Okay? Absolutely no cost to that. And we're also throwing in another course. We're going to throw in strategy number 3A. Now, this is an entirely different course based off entirely different rules. Now, originally, when we marketed this course, it was an E-mini course because it really works so well with trendy markets because it's a premier continuation method. You see, the last method was a pullback method. A continuation method is where you look for a breakout or some type of trend that's already established, and you look to buy as it's going higher or look to sell as it's going lower. Now we do this with a proprietary Bollinger Band setting. As you can see here, this is entirely a different market. This is an actual stock, TRIP. Now this is the proprietary Bollinger Band setting we teach you in the course. This is not a pullback. The stock is going straight up. Now most people would say, well, this is overbought. It's like a little bit too high here. How can I buy it? But the beauty of this continuation method is that it knows when there's more gas left in the tank, and it can often get you in before a really big move. It works also to the downside, okay? Here's our Bollinger Bands. We teach you the complete rules with the Bollinger Bands applied, and a sell order here, and you can see how the market continued to go lower and lower. Now, this usually runs for $6.95. We're not going to charge you anything for that as well, okay? Strategy 3A. But we're not going to stop there, okay? We have extra bonuses for all the Candlestick Trading Forum attendees today. Because of our association with Steve Bigelow, we got a great offer. We're going to throw in 7 Candlestick Forum bonuses. All right? The first one is the add-on. So if you have TradeStation, Metastock, NT4, Sierra Charts, Ninja Trader, or even our PTS Primo charts, we'll give you the add-ons, meaning the up and down arrows for these settings, and which includes also the Dodging Channel indicator for those particular platforms. Okay? That's nearly a $1,900 value. We're also throwing in our Full Secrets of a Stock Specialist course. This is a 3-hour video seminar. About 5 years ago, I was asked to speak in Denver at a conference, and I spoke for 3 hours, and I talked about many more different edges and techniques, and we're throwing this in as well. Also, we're throwing in, unfortunately, I don't have any more signed copies. I was recently at a seminar, and it just sold out. We gave away all of our copies, but we will supply you with a free PDF version of my book, which talks about my trading on the floor and how I was taught a lot of these methods through my mentors as well. Bonus number 4, you're going to get 6 months of our PTS Primo Charting Platform access. Now, let me talk about that in just a few moments here. Let me move on to bonus number 5, Secrets 2.0 course. This is taking the original Secrets of a Stock Trading Specialist and taking it up a notch, more elite and advanced ways to trade the markets, any market, any time frame. Bonus number 6 and bonus number 7 are our scanners, okay? You can actually use our individual scanner to look for individual strategy setups, or use our multiple scanner for multiple scanning strategies. Now that you have strategy 3A and strategy 1, if you take part in this great offer, you'll have all of those. Now, let me tell you the best thing about these 7 Candlestick Forum bonuses. And this is the next one, which is actually bonus number 4, 6 months of our PTS charting platform, because there's so much included with this. All right, remember, everything you saw today was generated on our platform. And everything is pre-canned. It's already pre-formatted. The Dodging channel settings, the Bollinger Band settings, all the up and down arrows, and tons more information. This is the chart that really teaches, this is a charting platform that teaches traders how to trade. I specifically took 42 years of everything I've accumulated and put it into our platform and made it as simple as possible. Let me show you what's included. Obviously, you're getting strategy 1, strategy 3A, and all the complete rules, complete access, our online course, and you know all the different places for stop placement, exiting points. But you're also going to get our strategy signal scanner, okay? This is a great feature here. We've made it tremendously simple. You simply click on the scanner page, click on load symbols. We provide you with different symbol lists, ETFs, stocks, NASDAQ, S&P, currency pairs, futures, Forex. Pick whatever one you want, and then simply hit scan. And roughly in about 30 seconds, you'll see a list of the buy and sell setups for the next day. The bars in green represent buy signals. The bars in red represent sell signals. You'll have all this in roughly about a minute every night for the setups for the next day in strategy 1 or strategy 3A. Now we also have our enhanced buy-sell line, another feature for determining the overall trend. Over 90 of the most prominent technical indicators, but here's one thing. Now we don't really teach a lot of fundamental news. They're not required in our courses, but we know that a lot of traders like to rely on indications, economic news, on earnings. So we have supplied free Bloomberg TV on the platform. All right, so you click on our media page. You'll see this on the chart, and you can watch live Bloomberg TV, any earnings announcement, any type of economic announcement you are interested in. You can hear it live as it's being broadcast. Okay, that's also included. And this comes with personalized tech support. If for any reason something you don't understand how to load up a chart or a video, we will be there in moments to resolve all your issues. Okay, this is just a great offer. You're getting all 3 of these things: strategy number 1, strategy number 3A, and I know it says E-mini there, but trust me, you can apply it to any market or time frame, and 6 months of our platform. Okay, now normally this would cost close to $7,500, $7,400 to be exact. Don't worry, we're not going to charge you that. We have it at a tremendous discount, but it's for 24 hours only. We're dropping the price down to $297. That's over $7,100 in savings. Only $297. You're going to get all this. And the one thing which I didn't mention is that you'll also get educational correspondence. You get my personal email. Anytime you have a question concerning how to trade something, if this is the correct way, if it's something you're learning, you can always email me and I'll respond back to you as soon as possible, usually within the next day or sometimes within minutes. So this is just a great offer for all the attendees today, for all the people in the Candlestick Trading Forum. And as you can see, strategy number 1, and just you can see our attention to detail in trying to teach you, we really want to make you a better trader. We want you to be in charge of your own trading. And so all of our methods are extremely simple the way you just saw. And as you can see here, this is a great discount. So here's how to take advantage of this, because trust me, a year from today, if you're still stuck where you are, you will have wished you became a member of these courses for such a low, inexpensive price. $297. I can almost imagine that most of you spent more than that in commissions within the last month. Well, these are yours to keep, okay? Plus you get 6 months of our platform where everything is pre-canned. You don't have to worry about getting the Bollinger Band setting on your computer. You don't have to worry about getting Dodging channels. It's already there. It's one click away, okay? Here's the information you need. My sister site, Pro Trader Strategies, I developed a platform with them, and they handle all of my courses and all of our discounts and pricing. You can contact them. I would suggest calling them directly if you have any questions concerning prices or discounts at 310-560-8255. 598-6677. That link you see at the very bottom is the link that will take you to the sign-up page for that particular offer. Now, that's not a live link, so you'd have to copy or write that down or copy and paste that onto your browser. But I believe it may be posted on the general chat. I'm not sure, but that should be, that's the link you need to go to. If you have any questions, though, there's absolutely no obligation. You can contact Pro Trader Strategies. I believe they have traders even manning the phones right now, trading consultants, and you'll be able to talk to someone right now if you have any questions. But I'm going to leave this information up here. I believe we have about 5 or 10 more minutes, and I'll take any questions that you may have. Okay, thanks once again for holding off on questions. Almost every platform has the Daunting Challenge. Great. So if you want to use your own platform, that's great. But trust me, we have had students tell us that it is so simple and everything is so, formatted so easy on our platform. And plus, it comes with this deal. Why not just toggle back and forth between the two? Because you'll see the up and down arrows right there. You'll have much more access to so many more features and information. We have a strength of trend tool that we have on the platform. You can use that determines if the trend is running out of gas or is still strong. We have proprietary exit points on the platform automatically displayed, proprietary entry points displayed. We have so many things on there. We have different ways of finding the overall trend with a color background. It's just a really great platform. I'm really proud of it, putting it together. And it has, as I stated, over 4 decades of information that I've accumulated right there at your fingertips. So sure, you can use it on your platform, but it's so much easier. And students have told us, I had a student that said, well, Steve, I like TradeStation. I'm used to it. And I said, that's fine, then. We'll give you the add-ons. You can use it on TradeStation. But you're still going to get the platform because it's part of the deal. And then I'll get an email about a month later saying, boy, I just look at your platform all the time and then just toggle back on to TradeStation because it's so much simpler. And that's the whole point. We want to make it simple for you. I believe Becky has posted the link. So thanks, Becky. That's the link to take you to the sign-up. And once again, if there are any questions or anything is not answered right here, don't worry. You can call that number, 310-598-6677, and they'll answer any questions you may have. Someone saying they do not see Daunting Channels or Thinkorswim. Any suggestions? Well, the suggestion I would say is become a part of this great discount because you'll automatically have it on our platform. The only other thing I can say is maybe do a Google search. You can do a Google search for free Daunting Channels. Now, we have a way to, hook up with Thinkorswim. The only reason we don't have the add-on for Thinkorswim is because our strategies are not protected on Thinkorswim. They won't protect it. So that means everything's open to everybody. And that's not fair if you spend $297 and then someone goes there and it's posted and they get it for free. So we want to protect it so that only our students are able to use the things that they've learned and gone through the course and purchased. So that's why we don't have it on Thinkorswim. But what they've allowed us to do is to use their data to apply it to NinjaTrader. So if you have NinjaTrader, or even if you don't, we set you up with a free NinjaTrader and then apply all the add-ons to that for you. It's totally free. We'll do that for you. But honestly, once again, our suggestion is why would you do that when you have it even simpler on our platform, which you're getting anyway, and it's a lot simpler and easier to use on our platform as opposed to NinjaTrader because it was designed to work there. Does the scanning work on TC2000? I'm not sure. That would be probably something you'd have to ask the tech support at Pro Trader Strategies because I don't use TC2000. I know that the scans we have on the platform are tremendous. And once again, we literally have databases in India markets, Toronto Exchange, the DAX, Philippine Exchange, Bitcoin currency pairs. We have, and this is all included. So you can scan every night for different markets. And also the scanner will scan for different time frames. So you don't just have to wait for the end of the day. If you want to scan a half-hour chart, you can scan for the setups for the next half hour. So that's the beauty of this. It's a really great opportunity for a very inexpensive price. Remember, what we're offering today for all the attendees would be close to $7,500. We're discounting it down to $297, but it's only going to be for the next 24 hours. Okay? I don't expect you all. I know it's different time zones here. I'm on the West Coast. It's 6 o'clock, but for some people it may be close to 8 or 9 o'clock. I know you may want to think about it, but you have roughly until about this time tomorrow to make the decision, and then it goes back up to that large price. So if you're sitting on the fence, you don't want to miss this great offer, okay? Let's see. Don'ton Channel is located on Thinkorswim Strategy tab. Okay, great. So there you go. So it is on there. Is there a fee for using your platform after 6 months? Yes. The cost of the platform goes to $97, but Pro Trader Strategies, that's still very inexpensive. I know some platforms run roughly, there's some platforms I've used that are $300 a month. $97 a month is very inexpensive. Some platforms, even I used before in the past, were $500 a month. $97 is still inexpensive, but I'm sure if you want to expand your knowledge or maybe buy another course, they will even give you and extend your time. Pro Trader Strategies, who handles all the discounts and all of the pricing, would be very happy to work with you. Okay, so nothing is written in stone, and that's why this is such a great offer. Okay. Could you share a trade for tomorrow? No, I haven't. I don't really, I'd have to go through a scan, which I haven't done yet. But you have the information right now. You have the information right there. If you have a Don'ton channel, why not check them out? Why not go through the, S&P 100 or the NASDAQ 100 and look for yourself? See, remember, I said at the beginning, we are an educational company. It's not our goal to force feed student signals. Okay, we don't want to tell you how to trade. We want to teach you so that you can decide. If I were just here saying, listen, you don't have to buy or anything, or you don't have to have a platform, just come to my website. I'll tell you every night what to buy or sell. You wouldn't be learning. I want you to be able to spot these things on your own. We're first and foremost an educational company because in my 42 years, I think Steve will attest to the same thing as well. The traders that make it are the ones that fully understand the process and have learned. They're not just blindly following someone or someone else. They really understand what they're doing. And so we're really trying to teach you, okay? Now remember, a lot of students who ask, can you use different, like a T-line for exit? Sure, you can use whatever you want. We encourage this. As I stated, we are not a systematic company where we say, no, everyone has to trade the exact same way. We don't want you to. We want you to be a part of the process. This, in my opinion, is the only way you can become a consistent trader. And if you found exit points by using Steve's T-line, well, that's great. It's fine. It's up to you. There are more than one way to skin a cat. We're just trying to share with you high probability methods that have stood the test of time. So do your homework tonight. Look through a bunch of stocks or futures, whatever. See if it works. And if you think it really works for you, then great. Take advantage of this before it goes back up to $7,400. Okay. Or if you just want to buy one strategy, it's going to go all the way back up to close to $700 just for the strategy number one. Well, I think we're just about out of time. I just want to say in closing, remember, if you have any more questions, contact Pro Trader Strategies. They would be happy to work with you, and there's no obligation. They're not going to, have to sell you anything. They'd be happy to answer anything, and their trading consultants are at 310-598-6677. I think you can see through our dedication, through teaching, and through really giving you a discounted price that we really spend a lot of attention to detail we have a lot of sincerity in really trying to teach you to become a better trader. We wouldn't, give you free information without that in mind. So we really hope you come on board with this great offer. And I just want to thank everyone at Candlestick Trading Forum. Thanks to Steve Bigelow, and also thanks to Becky and everyone helping me out here with the volume. I'm sorry about that volume issue at the beginning, but thanks for helping me resolve it. Okay. Thank you so much. That brings us to the end. I just want to say thank you and take advantage of that offer. There's the link right there, and I'll see you next time. Thank you so much.